Okay, Alhamdulillah, wassalatu wassalam ala Rasulullah. Jazakumullah khairan for showing up to this meeting today. Sorry about the delay, just making sure all the technical aspects are well taken care of. I titled the presentation, Navigating in a Sea of Ribā. And the reason why I titled it that is because the environment we have today, the economic system we're living in today, is in fact exactly that. And so today my plan is to go over a little bit about the history of money, how banking evolved, and Islam's stance on riba, and also to talk about riba itself, what that means from an Islamic perspective, because a lot of times people translate riba in English to be usury. Now usury is not a wrong word to use for riba. The issue with that translation is that usury is one kind of riba, but riba is not just usury. So there are many different types that you have to come across and understand. So first thing I want to talk about is a little bit about barter and money. You can see here is that I'm mentioning the first time money was introduced alongside barter and trade was in the period 600 to 650 before Christ or BC, based on the conventional calendar that's used in the West here, which tells us that originally it was barter, meaning I trade my product for your product, or service for service, or service for product. This middle thing called money historically wasn't really something that people really dealt with very much, right? Now let's talk about what money is. Money serves a few functions. The first function is that it is a medium of exchange, which means that people readily accept it as a method of payment. So when you take your money to the store today, they accept it from you. And today with the fiat currency, the reason why it's accepted is because it's legal tender, meaning the government is the one that made it worth what it is. But as far as the currency is concerned today, we know that it's not really worth very much. So it's a medium of exchange. It is a unit of account as well. So people measure the value of their wealth. So how much money do you have? I have $10. That's how we measure it. And also it measures the prices of goods and services. So by the fact that the money is medium of exchange, automatically makes it a unit of account. And the third function is it's supposed to be a store of value, meaning that if I hold on to my money, that money in and of itself has value to it. When you go back in history, when you talk about things like gold and silver, gold and silver even today, when you hold a piece of gold, you know this is something that's worth something. But if you hold a $10 bill or a $100 bill, even a $1,000 bill, it's a piece of paper. The only thing that makes it worth what it is because people accept it because the government makes it legal. No other reason. This is actually pretty important when we talk about riba, because what we're going to understand, hopefully, by the end of today's presentation, or have a foundation is that the monetary system we have today is actually what drives riba and makes it even worse. So the Roman Empire primarily used gold as main currency. We talk about in Arabic dinar, golden dinar. Well, it originates from denarius, and that was a 4.25 gram of gold coin. As far as silver is concerned, that's the Persian Empire. That's where the Persian Empire comes in. And it was a 2.98 gram coin. And during the era of Muhammad sallallahu alaihi wasallam, they had these coins circulating, in Mecca and those places, because the Arabs traded with the Persians and the Romans. And so sometimes they accepted payment, and they would pay them in gold dinar or silver dirham. And aside from these coins, there was no standard currency for the Arabs at the time, but they had gold pieces, silver pieces, they had these coins, everything was kind of floating around. The first leader in the Islamic history was the Umayyad Khalifa Abdul Malik ibn Marwan. He minted gold and silver coins based on these weights that you see in front of you. So this was the first Muslim coin. Now, throughout history, we had what we called the gold and silver standard. Right? Gold and silver standard. Money is convertible to gold and silver. So you have money, whether it's copper coins or anything else, you would trade it in for gold and silver, and it was readily available. And gold and silver were freely in circulation. No government took the gold and silver and held on to it and kept it to itself. And no, it was free. It was freely traded like anything else. There was no monopoly on it. Now, what happened is, just before World War I, countries were limited in how much currency they could print by the gold reserves they held. Meaning, depending on how much gold as a country has, right, is how much they end up printing in paper money. Of course, if you have a limited amount of gold and you print too much paper, what happens? The paper money is not worth as much, right? The less paper money you print with the same amount of gold, the more the paper money is worth, because if you have, for example, 10 kilograms of gold, and you print paper that's like, let's say, $100,000, and it's represented by the 10 kilograms of gold. That's not like printing $500,000 for the 10 kilograms of gold. It's not the same thing. Now you have more paper money floating around with the same amount of gold. So that's where you get into currency devaluation, and you get into inflation and things like that. Now, what happened in World War I is that these countries, because of the war expenses, they started hoarding gold. They weren't letting gold leave the country, and they weren't letting people even exchange gold for their money, right? So they wanted to hold on to their gold reserves, and they even went as far as printing even more money than the reserves that they had in order to be able to pay for war expenses. So this is the first compromise we start seeing regarding the gold and silver standard. A few things happen in history which are really important, because again, before we talk about riba, in the realm of the banking system today, we have to understand what happened to money over history. Talking about riba back in the time of Muhammad sallallahu alaihi wasallam, when it was gold and silver and so on, as we're going to see momentarily, isn't like talking about riba today with the fiat currency, which is worth nothing inherently. It's not backed up by any precious metals. It's just whatever the countries decide to print, the central bank. I'll get into that. Inshallah. 1933, March the 9th, President Franklin Roosevelt issued an executive order declaring gold effectively illegal to be held by the public. So what they did is they told everybody, you can't hold on to more than, I think it was 5 grams of gold maximum. Every other gold that you have, you must give it to the government. Imagine, the government says, all the gold you have to give it to. Now they didn't steal it per se, right? But they said, you bring it in, we'll pay you $20.67 US per ounce of gold. And they had until May 1st, 1933 to do it. So they had, just under 2 months to do it. If they didn't, they were going to be charged a $10,000 fine. Now, $10,000 back in 1933 isn't like $10,000 today. It's a lot of money. Or you can go to jail. After doing this, Roosevelt revalued the gold to $35 an ounce. Now, you just traded your gold in, and you were given $20.67 an ounce. So if you had 1 ounce of gold and you gave it to the American government, they gave you this much money for it. Now they tell you, that same ounce that you turned in, if you want it now, you got to pay $35 for it. What does that mean? It means that the US dollar was devalued. It's not that gold became more expensive. Gold is gold. Gold is going to hold on to its value, no problem, right? But when people talk about, for example, today, the prices of gold are expensive. No, gold didn't become more expensive. The problem is that the currency became worse. The problem is inflation. That's the problem, right? So this is why when I talk about gold and silver, as you're going to be seeing today, it's a very important topic to keep in mind in order to understand, how do I protect my wealth from being devalued and becoming worth less in terms of its purchasing power. So I bet that makes sense. They turned in their gold and they were given $20.67 for the ounce. But then they said after that, okay, you gave us this gold and we gave you this money. Guess what? If you want that same gold now, you got to pay $35 an ounce. And this $35 an ounce is an important number when I get into a few other things. Now, is this the first time a government devalues currency? No, it's not the first time. We talked a little while ago about the Western Roman Empire and the Roman Empire in general. The Western Roman Empire devalued its silver coins, and later the Eastern Roman Empire did that to the gold coins they had. So the Western Roman Empire, they were into silver coins. Instability happened. That part of the Roman Empire became weak, and then the Eastern Roman Empire became strong, and then they had gold coins. They also did the same thing with devaluation. The sizes of the coins sometimes became smaller, or the gold content was less. So maybe the gold content was 95%. They would make it, for example, maybe 60%. So this is something notorious that the government does, is that they devalue currency. unfortunately. And this comes at our expense as people who have all this money, and all of a sudden this money which I have is not worth as much anymore because the government decided, you know what, your currency now is going to be worth less than before. And the example I gave right now. Now, World War I, as we talked about it, the high costs forced Europe to borrow from the US, because the US was kind of the main banker, if you want to call them that. So they borrowed from the US, and because of this, they charged, obviously, interest on their loans, and a lot of gold went into the US, right? By 1930, the United States was the world's principal creditor, with war debt repayments not ending until 1933. Now, if you go back to the previous slide, we just talked about how this important date of 1933, when they took all the gold in, look what's happening at the same time here, right? They were the principal creditor, and 1933 was the year, as I mentioned, in which the U.S. confiscated all the gold from the public. So they were taking gold from people, and they were taking it from other countries who were borrowing from them and paying them. So the U.S. had all this gold now in terms of storage, right? Now, another thing that we should mention is, which is another really important part of the mix here, 1944, and this is something that I'm sure is more popular than this story about the U.S. taking all the gold from the public, right? 1944, 1 year before the end of World War II, we had the Bretton Woods Agreement, right? The USA controlled by that time, the US controlled 40% of the world's gold. Can you imagine? Now, by the way, today's gold, just so you know, gold every year only grows by about, I think, 1% or 1.5% a year. Gold doesn't grow very much because, you have to find gold, you have to mine it, you have to clean it, and all this other stuff, and do whatever you do with it. So gold doesn't grow quickly. If you take all of the gold today and the whole world, you know how much it would be? It would fit into an Olympic-sized pool. Now, Olympic-sized pool is pretty big, but that's all the gold in the world. Can you imagine? So there's not much room to play with gold the way the governments play with the fiat currency, right? So they controlled 40% of the world's gold, and now, because we have a new standard, there's a new gold exchange standard now. It's not a gold standard anymore. See, when it was a gold standard, it was because the gold and silver were freely flowing around the world. No government took it. But as soon as the government started taking all the gold and started hoarding the gold, now it became a gold exchange standard, because now they say, you know what? If you want to get 1 ounce of US gold, you got to pay $35. So it's an exchange now. It's an exchange, right? Europe was bankrupt as it ran out of dollars and gold due to war expenses. Again, the same issues happened, World War I, World War II. And because of that, the US could not sell its products and sought to stimulate the economy with the Marshall Plan in 1947. So they had started sending out their dollars all over the world to Europe to provide economic aid, to help the world, because they wanted people to buy their products, right? So the US dollars flowed into the economy due to investment in the Cold War, and the world economy grew a lot in 1950s and 60s. Now, the US fell into budget deficits because they started paying a lot of money into their own economy, and they also had to spend on the Korean War and the Vietnam War. And because of all this US money flowing around the world, US dollars became abundant around the world. Now, if we go back to the promise the US made over here, what did they tell everybody? They said, you know what? The United States dollars became the world currency. If you want to get 1 ounce of US gold, you have to pay us $35 US, which means what? The first thing you have to do is buy US dollars. We're not going to accept, British pounds. We're not going to accept this, we're not going to accept that. If you want to buy US gold, you have to buy US dollars first. So this US dollars became the world currency. So when you go back here, in terms of what's going on with all the expenses that the US is paying for, the US dollars are going all over the world. What ends up happening is that all these countries are like, okay, great. We have all these US dollars. Okay, US, we're going to bring our US dollars in. Give us some gold. Now, because the US printed so much in dollars, and it became something that was around the world in such an abundant way, the US was running out of gold. And so now comes this shocking thing that happened in 1971, and this is the turning point in history. This is the major turning point in history. Because look, up to then, what was it? Before, it was the golden exchange standard. Or before even that was the gold and silver standard. People had gold and silver floating around. Whatever currencies they had, they can trade it in for gold, no problem. Fine. Next step, governments confiscated gold. they took it and they kept it to themselves and said, if you want it, the US says, if you want, 1 ounce of US gold, you got to give us $35 US for it. That's the gold exchange standard now, because you have to exchange it with the government. Now, guess what happened? The US said in 1971, Richard Nixon said, we're abandoning this agreement we did in 1944. We're not going to be giving you, gold for US dollars anymore. And the money that we have, as we know it today, is where it changed in that year. Money is no longer tied. It has been completely divorced from precious metals of gold and silver. So that's a very important step. Now remember, the US at that time, they had promised up to that point, if you give us $35 US, we'll give you 1 ounce of US gold. That was a promise they made. They broke their promise. Instead of these US, if you had all these US dollars, let's say you had $35 US with you at that time, and you were going to go August 14th, you said, I'm going to go the next day, and I want to get 1 ounce of US gold. You go, you want to buy it on the 15th, and they say, we're sorry, we don't accept US dollars for gold anymore. What happened? You have US dollars? Okay. If you want, instead of buying gold, why don't you invest in US bonds? You know what that means, right? When you're buying a bond, what are you doing? You're loaning your money. So instead of the US saying you can have gold instead of US dollars, no, you can buy investments from us and we can give you a little bit of interest on it. So instead of taking gold from us, you're going to loan us this money. Complete opposite. See the problem? So this is all just the basic stuff that I'm talking about here, because in my book that I brought copies of today, I get into this in more detail along with other things too, which inshallah, hopefully you can get yourself a copy after. But this is the basic idea that I want to make sure that I drive home today. Now, this is what happened to money over history, and today we're living this unfortunate, reality. Now, what about banking? I broke it up into very simple, about 3 or 4 pillars, basically, that made banking what it is today. First of all, in history, whether it's in the Industrial Revolution or whatever, you had promises of payment which were documented in what was called a bill of exchange. A bill of exchange is like basically it's a promissory note. So basically, debts owing from buyer to seller. So you buy something from me, and you tell me, I promise to pay you this much in a month, for example, right? So we sign a promissory note, and me, the seller now, I have this piece of paper that says you promise to pay me whatever you pay me in a month. What happened is that I can't wait for this money for a month. So I find somebody else, let's say you owe me $10,000 because you bought something from me. And you say, I'll give it to you in a month. And I'm like, man, I need the money right now. In a week, I'm like, I need this cash flow. What am I going to do? I go to somebody else, maybe a goldsmith or somebody at that time, and I tell him, listen, I got this $10,000 promise. I want to sell it to you. How much are you going to pay me for it? He says, well, usually I pay $9,000. I'll give you $9,500. I'll be a nice guy today. So I give him this piece of paper that says $10,000 on it. He gives me $9,500. I walk away, and now the buyer owes him the $10,000. What just happened? I pocketed $500. That's riba, right there. So this is with discounting notes. That's one thing that you have. And today we have this issue of discounting. If any of us who studies business math knows what I'm talking about, you discount bonds and whatever. It's another topic on its own. Now, the second thing we have is that in loan transactions, the scribes who wrote loan contracts became the middlemen. Originally, you have a borrower and somebody's borrowing, someone's lending. And then you had the person who's writing out these contracts. These scribes that wrote the contract said, why should I be just the one that writes the contract between person A and person B? I'm going to borrow the money from person A, give them a little bit of interest, and then take this money and loan it to person B for higher interest. So I can pocket something. So this middleman who used to write contracts now wants to be the banker. So person A wants to loan his money out to person B. He comes in the middle, borrows the money from person A, pays them a small amount of interest, charges person B a high amount of interest. Difference of the two gives this guy a little bit, he keeps the difference. That's banking. That's banking. 13th century Venice, you had people who would take their gold to goldsmiths for safekeeping. Because back then you had the goldsmith, you had the silversmith, you would take your gold, you give it to him. He takes this gold, puts it away, hides it in a safe place, but then what happens? Gives you a piece of paper that says, Mr. So-and-so or Mrs. So-and-so, here's how much gold you have with me. So you can come anytime and bring this piece of paper and claim your gold anytime you want. So people did that with the goldsmiths. But then what happened? The goldsmiths obviously would loan this gold out. and they would loan it for interest, represented by these pieces of paper. They got greedy. What did they do? They printed more paper than the gold. Because they know that people are not going to all come together at the same time and want all their gold right then and then. Right? So they said, well, if people are going to, if only maybe 10% of the people are going to come and take their gold, that's a 10% reserve. I can create, for every $10 of gold, I can create $90 more of paper, loan it out, make interest on it, because not everybody will come and want their gold from me. So it's just paper circling. So there's an example of banking right there. And that's where we get into this thing called fractional reserve banking. You know, the way banking works today, at least on a macro level, maybe not on a micro level, maybe when you go to an individual bank, it's not exactly like this, but today, when you want to borrow money from the bank, when you go to the bank to borrow money, that's when the money creation takes place. Yeah, and what I'm saying is that money today is created from debt. The bank will do a journal entry on the computer, debit this, credit that, money will be created. The Federal Reserve in the US is a private cartel of bankers. It's not federal, and they got no reserves. It's not federal, meaning it's private. It's not even government. And they have no reserves. They create this money, which is air, basically, fiat currency. Then they use this money. This money is used to, is loaned out to the government and other banks and whatever. And then they use that to do what they do. So in other words, money, as we know it today, is created from debt. So if someone wants to go and get a mortgage on a house, what they've just done is they went to the bank, they borrowed this money to buy the house. They have increased the money supply by the value of the house and the loan that they're borrowing. And again, all this stuff I explain here in minute details. Even if someone is not an accountant, I've made it very simple so that you can follow the numbers and understand exactly what's happening. Somebody are going to say, no, that's not how banks do it. When I go to RBC, they have reserve. Yeah, that's on a micro level. One bank at a time. But I'm talking about on a macro scale, where does all this money come from? It comes from debt, initially. If the government wants to borrow money, in the US for example, they'll ask the Federal Reserve to create this money, and these are private like cartel of bankers. These are not government institutions. They create this money, it goes out into the economy, and then of course this Federal Reserve is charging it interest. They're not doing it for free, right? So these are basics of how. So we talked about how money evolved into what it is today, and these are kind of some guidelines about what happened to banks, or where banks came from. Now, there's a shubha, there's a doubt, which today unfortunately is repeating itself. We had this issue before, back in the 50s and 60s. They say, well, bank interest is not riba. Bank interest is something else. They say, well, they look at the West. The West is successful. The economies are doing very well. Well, that's what they think anyway. It's actually not very well. And they say, well, we have to find a way to legitimize it. We have to find a way to legitimize it. So modernist Muslims, and I'm going to be frank about this, so self-proclaimed reformers that are sometimes very popular in the da'wah circuit today, they'll come up and they'll say these kinds of things, and they'll entertain these very odd opinions. Yeah, they're opinions. They're opinions that some scholars, a few of them here and there, and you can count them on your fingers, said it. But the ummah, and you're going to see this in a bit, even modern day scholars are upon a consensus that bank interest is riba, straight out. So this doubt, again, I address this doubt in a few chapters in my book to basically dispel this myth for once and for all, that bank interest is riba. But they'll come and say, the riba in the Quran is prohibited due to the rich exploiting the poor. Well, that's one reason. They also say it's taking advantage of people's dire circumstances. Yeah, that's true. But that's part of it. Banks are doing business and charge interest based on mutual consent. They say, well, you're not being forced. You're going to the bank yourself and you're getting a mortgage and you're borrowing money. It's not like no one's forcing you. You're not in a state where you're like in an absolute necessity to borrow. You're doing it yourself. It's just trade and business. This is what they say. But we deal with this issue. We have to look at what is riba. Not about the wisdom behind the prohibition. See, in the Sharia, the majority of scholars say that when you're looking at something, you have to look at it for what it is, not for the reasons why it's haram. That's secondary, or the wisdom. Because the wisdoms and the reasons may not always be present. Sometimes they're there, sometimes they're not there. And who's to say that we all agree about what the wisdom is, what the hikmah is behind one of Allah subhanahu wa ta'ala's legislations? So it's about what it is. Now this verse over here, subhanAllah, this morning, the Shaykh in one of the masajid was talking about this verse. Allah subhanahu wa ta'ala says in Surah Al-Baqarah, الذين يأكلون الربا لا يقومون إلا كما يقوم الذي تخبطه الشيطان من المس. Those who consume interest cannot stand on the day of resurrection except as one stands who is being beaten by Satan into insanity. Scholars are talking about this on the day of judgment. Some scholars said even here, before the day of judgment or the day of resurrection, people who deal with riba, the way they act is like they're as if they're possessed. They're always nervous, and I want this. And you can see that their eyes, look on their eyes, they're really strange looking people. They're so greedy and so much almost like they're drunk. They're in a trance because of all the money they're making from riba. Now, the impression that some people give is that it's only riba and it's only haram if it involves you taking advantage of someone who's poor. Right? But if it's mutual consent, it's okay. Well, let's see what the Mufassirun said about this. You gotta go back to and not just the Mufassirun. We need to go back and take a look at when this verse came down, was revealed from Allah subhanahu wa ta'ala. It says, الَّذِينَ يَأْكُلُونَ الرِّبَا. For those of us who, I'm sure of us many, even those who don't know Arabic, in different scripts you have in different languages, the alif lam in the beginning, this is called alif lam al-ma'rifah. Meaning that it doesn't say الَّذِينَ يَأْكُلُونَ رِبَا. It says الرِّبَا. The riba. So when you say about something about it, that means that people knew what it was. It's not something strange to them. It's something that was customary and known in the society. So we need to go back and see, what did the Prophet ﷺ say about it? What makes it what it is? And just as importantly, if not maybe secondarily, what did the Sahaba say about it? How did they understand what riba is? Right? Tafsir al-Tabari. Qatada is one of the tabi'un, one of the successors to the Sahaba, described it in the realm of trade. Okay, so this is the one that these modernists stick to. And they say, see, here he's saying it's in the realm of trade. The sale of commodity with due date. So I sell you this book right now, and I say, okay, I'm going to charge you $20 for it. I say, you know what? I can't pay you right now. I'll pay you in a week. I say, okay, brother, no problem. 1 week. 1 week comes, and I say, okay, brother, where's my $20? You say, okay, but I don't have enough money right now, right? I'm a student, I'm having, okay, no problem. I'll give you a month to pay it. Pay me 30. That's it about now. So he's talking about one arrangement is that there's a sale of a commodity with a due date, and it goes up if the person cannot pay. So they say, see, in the beginning, it was trade, it was halal. The only time it's haram is when someone is in a desperate state, they can't pay, then they're forced to accept an increase in the price, or basically it's a debt now, and then that becomes riba. And they stick with that. They say, see, but banks don't do that. You agree from the beginning with them on the terms of interest. There's no surprises. It's mutual consent. The other thing that we have about a similar narration, Al-Muwatta of Imam Malik, Zayd ibn Aslam described it as general loans. He described the same arrangement where someone borrows money right now. So you don't buy from me something for 20. You borrow $20 from me today, whether it was in gold dirham or silver or dinar or dirham or whatever, right? You don't buy something from me. It's not trade. You borrow money from me. And again, the same thing happens. Brother, I'm going to give you back the $20 in a week. I say, okay, brother, come back in a week. No problem. I'll give you that. So then you come back and say, brother, I can't pay you $20. I don't have the money. I say, okay, I'll give you another month. Pay me 30. Same thing, except it didn't start off as trade, right? But it started off as a loan. So right here we have an arrangement which is pretty similar to banks. In fact, if you think about it, the riba that was being charged at that time was not from the beginning. It was after a period of time passed and you got an extension. Is that what banks do today? Banks are even worse. They charge you riba from the beginning. They don't wait and say, so the bank is going to give you an interest-free loan and for a month, and they say, okay, Mr. Bank, I can't pay you. So the bank says, okay, now I'm going to charge you riba. No. The bank from the beginning, they charge you riba. So it's actually even worse. If you want to talk about what's worse between the two, banks are worse than what was happening back in Jahiliyyah. In Tafsir al-Tabari, Mujahid described it by stating that a man would owe a debt to another man and just promise him to pay a lot of money in exchange for the debt. Again, where do you see here in this tafsir anything about someone being forced or compelled. There's no forcing happening. Someone borrows and they agree. You want more? Fakhruddin al-Razi in his tafsir, he said money loaned out on condition of paying monthly interest. So with his arrangement, for those of us who take business math, maybe you understand a little bit about bonds. You borrow, for example, $100, and then for a year, you're paying, let's say, $5 every month of interest, and then at the end of the year, you pay back the $100. So the installments you're paying between the due date of the loan, you're paying interest now and the principal at the end. Okay? So this is again showing that interest was being paid from the beginning, and the principal wasn't paid. And if for some reason the time comes to pay the principal, and a person cannot pay it after paying all these installments of interest, they'll be given an extension and they'll be charged more interest. This one here is very important. Imam al-Jassas, he talked about it as qard ad-darahim wa dananir. Qard means loan. And qard means that you're borrowing something and you're free to do whatever you want with it. Isn't that what money is? If you borrow money from me, you take this money and you spend it. It's consumed. So you don't give me back the exact same dollar bills. You give me back dollar bills, but they're not the exact same ones. And the word qard is even sometimes used for things which are consumed, not just money. So you might borrow from me, I don't know, maybe a bottle of olive oil. And you're going to give it back to me. Now you're going to use the olive oil and eat it or whatever, but then in about a month or whatever it is, you go and give me another bottle and give it back to me. That's called the qard, because you are using and consuming what you're borrowing, and then you're giving me back something which is similar to it. So you're free to use it however you want. So he's talking about qard. That's what money is. But this is the important part, because remember they're saying, oh, it has to be something people agree on. If people agree on it, it's not riba anymore. على ما يتراضون به, based on consent. So they loaned each other dirhams and dinars, gold and silver coins, based on mutual consent. Today when you go to the bank, isn't that based on mutual consent? Is anyone forcing you when you go to the bank? No. Is anyone forcing you in that arrangement? No. In fact, maybe I don't get into this in this PowerPoint, but some people claim that it's only haram if it's based on consumption loans. But if it's business loans, it's okay. Did you know that, I would say, based on researching, the majority of riba that occurred in Jahiliyyah was not on consumption. It was on business. And you can look at Al-Abbas ibn Abdul Muttalib, radiyallahu anhu, the uncle of the Prophet sallallahu alaihi wasallam. When the Prophet ﷺ prohibited riba and said all the riba of Jahiliyyah is under my 2 feet, and the first riba I started with is who? My uncles. And if you investigate, Abbas Abdul Muttalib was a very charitable man. He helped people migrate from Mecca to Medina. He did a lot of things for the people and he provided them with money. A person like that was not charging interest on consumption loans. It was him, what he did is he would loan money to caravans that went to trade in Syria and Yemen on the basis of riba, because in this case it was business, it was not consumption. And there's also mudaraba, which is something I get into my book that he also did as an arrangement. So I'm going to try to go over this here. Riba means increase, addition, expansion, or growth. And riba of Jahiliyyah is called riba al-nasi'ah. Some people like to deceive you and tell you, no, riba al-Jahiliyyah is one thing and riba al-nasi'ah is something else. No, it's the same thing. Why? Because nasi'ah comes from the word nasa'a, which means to postpone, defer, or wait, and refers to the time it is allowed for the borrower to repay the loan in return for the addition or the premium. Riba al-nasi'ah refers to interest on loans, straight out. No one can play with that. This is what the word nasa'a means. And the Razi, as I mentioned, explanation in the previous slide, defined the riba of Jahiliyyah. He said in his tafsir that it is riba al-nasi'ah, and in I'lam al-Muwaqqi'in, Ibn al-Qayyim said the same thing. He said riba al-nasi'ah is haram by consensus. And he explained it to be the one mentioned in the Quran, which is in fact riba al-Jahiliyyah. It's not a different kind of riba that's less severe. No, it is the same riba that is haram. And I guess, as I said before, certain people try to make it seem like riba al-nasi'ah is only mentioned in the hadith, and that it is not the riba of Jahiliyyah that is noted in the Quran. No, it's the same thing. The Sahaba all knew what riba al-Jahiliyyah was, and they knew that it was riba al-nasi'ah. Imam Ibn Qudama and Az-Zarkashi stated that the Muslims are upon an ijma', consensus of the prohibition of riba al-nasi'ah, which is the riba mentioned in the Quran. It's not something different than what's in the hadith. Scholars of fiqh have a principle which states that any loan, any qard, that brings about any benefit is riba. It doesn't have to be money. If I loan you money right now, and I tell you, okay, I'm going to loan you money, but you have to do me a favor and you have to start giving me a right to finish your college for the next month. That's riba. Doesn't have to be money. Any conditional favor that is imposed on the one who is borrowing is riba. Doesn't have to be money. And then Al-Mughni Imam Ibn Qudamah said that there is no difference among the scholars in this regard, that it is haram by consensus. Again, as I mentioned, there are people that in recent history tried to legitimize it, like you have scholars like Muhammad Rashid Rida, you have Muhammad Abdu as well, his student in Egypt, Ahmad Khan and Fazl Rahman in India did the same. So there was different efforts around the world to try to do this. But here's the thing, I talked about consensus, right? An important conference took place in Al-Qahira in Cairo in 1965, in 1385 Hijri, attended by 150 Muslim jurists representing 35 Muslim countries. We're talking about like the Ummah here. We're not talking about just a few countries. No, this is the Ummah. On this occasion, the Academy of Islamic Research at Al-Azhar University in Cairo declared an ijma', a consensus, that bank interest on all types of loans is the prohibited riba. And they said it refers to consumption or commercial loans. Don't try to differentiate between the two. It applies to both consumption and commercial. Loaning for riba is prohibited and neither necessity or need permitted. You can never say, well, I'm in desperate need, I have to loan for riba. No, that's never the case. And borrowing is only allowed in cases of dire necessity, which in Arabic we call darura. Right? This is where you have no other choice. And the scholar said what this means basically is if there's going to be a loss of life or limb. And this is what scholars said. I think Al-Jassas in his tafsir said the same thing. Is that if you have a situation where if you don't borrow on riba, that it might be life-threatening, like maybe somebody has to do an operation in the hospital, and if they don't have enough money to do it, chances are he might die or might lose a limb as a result. In that case, you would have to, out of necessity. Now, an obscure fatwa was issued in October 2002 by a 14-member committee headed by Sheikh Muhammad Sayyid al-Tantawi, rahimahullah, may Allah have mercy on him and forgive him, right? Again, 14 people on a committee. Here we have 150 Muslim fuqaha from 35 Muslim countries. And ijma' was already established in 1965. They came along and they started saying, banks are investment agents who invest in the wealth of the depositors and business transactions and pass on a fixed rate to them. So they made it seem like the banks are agents and that it's a business partnership. They try to play with it, but the scholars refuted them very, very strongly. And I explain here very clearly that banks are not agents. They borrow the wealth of depositors and loan it out for interest. That's what happens. When you put your money in the bank, you are loaning your money to the bank. And anybody who studies banking knows what I'm talking about. Right? It's not you're not a business partner with them, you're not buying shares in the bank. No, you are literally loaning your money to the bank. And anytime you give something to someone and they can use that thing and consume it completely and wear it out or whatever, and then they have to give you a replacement for it later on the same level, this is called the qard. So what you're doing is giving the bank a qard. And the other thing about a qard is that you have to guarantee this thing that you borrowed. So banks guarantee the demand deposits of their clients, so the wealth is treated as a loan from the client. Can you go to the bank and tell them I want to withdraw my money, and the bank say, I'm sorry, someone came and stole it? No, it's a qard. It's a qard, means it's guaranteed, right? If the bank was an agent for you, investing your money on your behalf, a wakil, which we call them in Arabic, it would be the one to take a fixed return for managing the funds. The bank would take a fee from you, and then the profits and losses are yours. With banking, it's the opposite. The banks take all the interest and everything they make, and then they give you some little peanuts of interest. They're not agents for anybody, except themselves. Again, this obscure fatwa was rejected by the consensus in 1965, and many scholars after this fatwa refuted it very strongly. One of them is Dr. Yusuf al-Qaradawi, the same, may Allah have mercy on him, the same person who unfortunately led this fatwa in the West about the permissibility of buying houses on a mortgage, which I'll talk a little bit about at the end. And this is something that I also talk about here. I dedicate a couple of chapters quoting scholars that completely refute this fatwa for what it is. They take it out, they look at the two pillars that this fatwa is built upon, and it shows that they're very frail. It's a very, very weak fatwa. Very weak. In fact, it's wrong, 100%. But he, rahimahullah, give him credit. He wrote a book called Fawaid al-Bunuk Hiya Riba al-Haram. He said the interest of the banks is the prohibitive. And I use this book as a reference in mine as well. Right? Give him credit for it. The Assembly of Muslim Jurists in America, AMJA, released a small but detailed booklet responding to the fatwa of Sayyid Tantawi, rahimahullah, that was done in 2002, as I mentioned. So it's not like scholars are sleeping. Like if anyone comes up with a strange opinion, the rest of the ummah will right away clarify for the people. It's just a matter of people doing their homework and researching and not just taking a fatwa. Oh, this imam said it, this sheikh said it, it must be right. No. the statements of scholars, you have to find evidence for them. They're not evidence in and of themselves. This is very important. Allah subhanahu wa ta'ala, Rasulullah told us that a scholar gets one reward if he's wrong, and two if he's right. But he said if he gets one reward if he's wrong, which means he could be wrong. And if you could be wrong, you're not supposed to follow him. You have to look at what other scholars say and look at their proofs. Even as lay people, like we might not be trained in fiqh and those kinds of things, but these scholars who say these things, they give explanations. For who? Just for the sake of it? No, for us to read and compare. Now, here's an important hadith that we should really be careful about. And this is, again, to help us put things in perspective. This is in Sahih Muslim. لعن رسول الله صلى الله عليه وسلم آكل الربا وموكله وكاتبه وشاهديه وقال هم سواء. Rasulullah صلى الله عليه وسلم, it was said that he, this is by Jabir, cursed. وما أرسلناك إلا رحمة للعالمين. We sent you as a mercy to humankind. Which means that the Prophet ﷺ rarely cursed. Rarely. Very rare. This was one instance. Which tells you that it's pretty heavy, right? It says, curse the one who consumes riba, the one who takes it. And that's the worst one, by the way. Because in the Quran it mentions them, that they will be standing on the day of Qiyamah like someone who was possessed by the devil. Okay? The one who consumes it, the one who pays it, the one who writes it down, the contract, yani, and the two who witness it, and in some nations it was just one witness, and he said they are all the same. Means they're all cursed. Okay? So we got to be very careful with any contracts that involve riba. Credit cards. I have one. Necessary evil. Why does someone have a credit card? It's a contract of riba actually. But why do we have one? Because there are some transactions, the only way to pay is with a credit card. And sometimes you have to have a credit card because you have to build credit so you can lease a car or buy or for example rent an apartment. It's a necessary evil. It shouldn't be something that we just use and okay, I'm going to pay it on time. It's okay, I'm not going to pay riba. You're still entering into a contract that says if you don't pay on time, you will pay riba. You're agreeing to it, whether we like it or not. Right? So we have to do our best to avoid. Student loans are also a contract of riba. This might hit hard a little bit, okay, but it's true. So I remember Sheikh Bilal Phillips was asked once about student loans, and he said, it's very simple. He says, work part-time, pay for your tuition, and just do it this way, and don't borrow from the government for your loans. Because, many people I know who went into this, they're paying their loans off, and it's taken them years to pay it off, and they're paying interest on the loans. Yeah, I know the government sometimes may forgive and whatever, but it's a loan at the end of the day. So we have to be careful with this. And anybody, for example, working in a bank may be somebody who's sitting down and literally writing out contracts of riba. He's going to be in this hadith as well. Right? We got to be careful with stuff like that. Right? One should not work in any position in which he writes contracts of riba and or witnesses them. Even accountants. I'm an accountant. I have clients, and I avoid clients who deal with interest. Now, an accountant may not necessarily be in this hadith because an accountant is writing down a transaction that happened in the past. He's not part of the contract. And this hadith has been explained by people like the Mufti Taqi Osmani from the subcontinent. He referenced scholars who commented on Sahih Muslim and commented on this hadith that this is actually to do with the contract itself. So people that are like right now, we're witnessing a contract and somebody prepared it and then there's the payer and the taker. So this is actually the opinion I found to be stronger. It has to do more with the contract itself that's taking place, not an accountant coming 1 year later and recording a debit to interest expense and a credit to cash, for example. That's just recording something that happened in the past. It's a mathematical calculation. But some people like to say, well, see this hadith here? We're surrounded by riba, so it's all fair game. Let's go get a mortgage. We're surrounded by it. So we have no choice. They make it sound like it's everywhere. Well, it is everywhere in the sense, but it doesn't mean that justifies us going and doing whatever we want under the guise of, oh, everything is a necessity now. We've got to be careful with stuff like that because we want barakah in our lives at the end of the day, right? One should also not work in any position in which he is assisting in the process of attaining loans. For example, an accountant working in a company where they're in charge of, keeping track of the accounts of a company, the lines of credit and so on, and communicating with the bank to make sure that the company is going to have lines of credit and to keep that credit score high. That's a problem because that goes under this verse, وَتَعَاوَنُوا عَلَى الْبِرِّ وَالتَّقْوَى وَلَا تَعَاوَنُوا عَلَى الْإِثْمِ وَالْعُدْوَانِ, and cooperate in righteousness and piety, but do not cooperate in sins and aggression. And then the rest of the verse, وَاتَّقُوا اللَّهِ إِنَّ اللَّهَ شَدِيدُ الْعِقَابِ, Allah is threatening with a punishment. So you shouldn't be assisting someone in committing sin. And so not all the accounting positions are the same. Right? Some of them, you may not be involved in this. Or you might be just recording a few entries here and there, that something that already happened that someone else did. But don't be involved in a position where you're assisting your company to get loans. or you're monitoring their accounts to make sure they're paying their loans on time. You want to stay as far away from that as possible. You might not be somebody who witnessed the contract and wrote the contract out or whatever, but you're still kind of in that gray area that you should be trying your best to get away from. Alhamdulillah, for me, personally, because I said I'm an accountant, I work for myself, I'm self-employed, so I get to choose my clients. So if someone comes up to me and the majority of what they do is based on riba, I'm like, I'm sorry, I'm not doing your books for you. I don't feel comfortable with it. Or if they're doing a haram, for example, they're, I don't know, maybe they have a variety store, and variety stores, they sell khamr and they sell lottery tickets and whatever. I say, I don't feel comfortable with that. Even though, as an accountant, I'm just doing their books for them, I'm doing their taxes, I'm not involved in what they're doing, I feel uneasy about it, right? This is just your heart, And that's why I talk about how, because you guys want practical solutions as students, studying, you can get out there, what am I going to do about buying a house and whatever? Is it just a gloomy future for us because now we're living in this sea of riba, navigating it? Can we do nothing? Well, the reality is that I can tell you as an accountant that even though you're going to school, eventually, inshallah, you will secure a job somewhere, work as an employee somewhere. That's great. But being an employee should not be your long-term plan. My advice to you is always have in the back of your mind that one day I want to become self-employed. Why? For many reasons. First of all, when you're self-employed, you're independent, you do things in your own terms. And second of all, from a tax perspective, you can pay a lot less tax as self-employed. You can write off a lot of expenses, a lot of legal things you can do to lower your taxes that you have to pay, which means you have more after-tax money and you can save more. Accounting as a field is one of the fastest ways to become self-employed, right? If you study accounting, you study tax and whatever, you can start doing taxes for people. The way I did, I started my practice back in 2008. Not very big. I work from home, I also teach part-time in the college here, the subject of tax as well. So for me, alhamdulillah, it's worked out in terms of a nice balance, But what I'm telling you is that it's one of the fastest ways to be self-employed because you don't have to work for accountants all your life. If you work for an accounting firm for even a year and a half, 2 years, and learn enough from them, you can go on your own and start doing your own thing, right? That's very possible. And also this thing about mortgaging a house in the West, this topic, to be honest with you, if I want to go over what that fatwa is and what they based it on, that requires a presentation on its own. I can't go into the details of it, but in my book I did go into it in detail, right? But I say in very simple terms, there is no blessing in owning a house by means of riba. Most people will not be able to save up to purchase a house outright. Most of us, who's going to save $500,000 to buy a house outright, right? It's not going to happen to most of us. We know that. Or might be in a long waiting list to get a house by means of Islamic financing. And even with Islamic financing, you have to be careful because not all these organizations do it 100% Sharia compliant. There's some things you have to do. And that's why when I wrote this, I said in the beginning, I'm not going to endorse any bank or any organization. Not because they're all bad, but they change. Sometimes their practices might change. They might change one thing or other. But this book is designed so that it helps you have a foundation to know what riba is and other topics. So that way if you go deciding to deal with this Islamic Housing Corp or whatever, then you have an idea about, let's find out if it's really Sharia compliant or not. And of course, there's the other extreme, people saying, these Islamic banks are just, they put the word Islamic and they're really dealing in riba, but they're just dressing it up. That's an extreme, and that's actually blasphemous to say. And that's not true. Some of them are genuinely trying. It's still a work in process. They're not perfect, but they're trying. And if anyone says this, and this is something that ironically happens sometimes, Facebook people come and they'll troll you and say, this is just another name for riba, Islamic banking. I tell them, subhanallah, the kuffar said, ذَلِكَ بَأَنَّهُمْ قَالُوا إِنَّمَا بَيْعُ مِثْلُ رِبَا. That's what the kuffar said. They said, bay' and riba are the same. Trade and riba are the same. You're saying the same thing as them by making this claim against Islamic banking and financing. How? How do you say that? You can say, okay, maybe they could do a little bit better here, this part here, to be more Sharia compliant, they can improve the situation. But to just say that all of it is just a banking in disguise, that's false. Now, I don't belong to any Islamic banks or organizations. I have no affiliations with anybody. I'm just talking from a neutral perspective here. But even the ones that do it right, it might be expensive. Right now, I know that, for example, there's a company called Menzil in Canada here. They came and did a presentation here in London, actually, I think a year and a half ago now, about the way they sell houses and that. And it's expensive. It's not something that some people might think, doing a mortgage is cheaper than doing that. It might be, but there's no barakah in it, right? And remember, I said even those who take a mortgage are paying rent on money in the form of interest. People don't think about that. You say, brother, I'm paying rent on apartments or on houses. I'm throwing my money out. No, you're not. You're paying rent because you're getting a fully functioning house. You're getting a washing machine, a dishwasher, a dryer. You have a house that's functioning. You're paying for the use of the house. You're not throwing money out. If you borrow money on a mortgage, you're paying rent on money. You're paying rent either way. One of them you're paying haram rent, which is riba on money. One of them you're paying halal rent, which is rent on a house. That's the difference. And who's to say that if you rent, you can't necessarily save, right? This is another thing that we got to think about. Our spending habits. How do we discipline ourselves from overspending? Credit cards themselves, as I mentioned earlier, they're a trap. If you depend on the credit card, you might find yourself in trouble. And next thing you know, you maxed it out. Oh, I can't pay the balances anymore. I'm in trouble. I maxed it out, and now I'm paying riba every month, minimum payment every month now. It's a trap. They bring you into it. So don't depend on it. See, and here I said that fiat currency is a problem on its own. It's inflationary nature. This relates to fractional reserve banking that I talked about earlier, in which money is created from debt, and the same money is multiplied and loaned repetitively. I borrow money from the bank, for example, and then I buy a car with it. The guy that sold me the car takes that money and puts it back in the bank again. Then that money is loaned out again, and it just keeps going. This is called the multiplier effect for those who study economics. The same money is being loaned out multiple times. Why? Because banks say, well, we just have to keep 10% reserve, and we can just loan out the rest. So if the bank loans you $1,000, you take this $1,000 and you buy a car with it, not a car, but you buy something with it. The one who takes the 1,000 will put it back in the bank, and this bank says, oh, the $1,000 is back. Wonderful news. But the bank says, well, we have to keep 10%, so we're going to loan out $900. That's the same $1,000 they loaned in the beginning, that the borrower took and bought something with it, and then the one who got this money put it back in the same banking system again, and then they loaned out $900. Okay. Another person borrows this $900 and buys something with it, and then the seller says, oh, $900, I'm going to go put it back in the same bank again. Bank gets $900. Oh, the $900 is back. Great. So that means I can loan out $810 and keep 90. It just keeps going. The fiat currency is created out of debt inherently, and then it just keeps on circulating, and it just keeps multiplying, and then you wonder why there's inflation and why people's money is worth nothing in the long run. This is pretty serious stuff. So in summary, brothers and sisters, this is the book that I wrote. I'm just trying to get you interest is a bad word maybe now, interested in it, so you can actually learn a little bit more about this. Lectures themselves, by themselves, are not enough. And people have to get used to quiet reading and research on their own in order to decipher. So in my book, I talk about the different types of riba. There's riba al-nasi'a and riba al-fadl, which is to do with riba in trade, answering doubts about bank interest, the history of money, evolution of banking, different modes of Islamic financing, and what are the right ways to do Islamic financing, challenges in regard to Sharia compliance that sometimes these institutions struggle with, challenges of the fiat currency system itself. Because again, the way the fiat system, the way that riba is made today is something that was never done in history. Because of the fiat monetary system, you can make way more riba, way more than from gold and silver. Because gold and silver supplies are very limited, and they only increase every year by a very small percentage. Like I said, gold increases a year by like 1.5% or something very, very small like that, right? In terms of intrinsic value of currency, right? So how much riba can you charge on gold if the gold supply is limited? But if you can print out a lot of money and create it out of debt inherently, you can charge a lot of riba on it then, right? So this is something to consider. And also, very importantly, critical analysis of fatwa allowing the purchase of homes with conventional mortgages in the West. Unfortunately, like I said, you get a mix of people today. Some of them will say, well, brother, the scholars allowed it, so it must be okay. They know what they're talking about. So many Muslims were, unfortunately, deceived by this fatwa. And very few of them are still, for example, not doing this. Many of them fell into the trap of mortgaging a house because the only way to buy a house is a mortgage, right? And I said to them, the interest on the mortgage is rent. You're paying rent on money, number one. Number two, there's going to be no barakah in it. The Prophet ﷺ used to seek refuge with Allah from debt, halal debt, not haram debt. Because haram debt, you're not supposed to do it. That's the point, right? So, Jazakumullah khair. I took a little bit longer than I think wanted to, because I want to give you a chance to ask questions. But you can find, I have outlets online as far as Facebook and YouTube. And inshallah, this lecture, I will be uploading it on my YouTube channel and on Facebook as well. The PowerPoint, I saw some of us taking notes. This PowerPoint, inshallah, I'll convert it to a PDF, and it'll be in a link downloadable right below the video when I put it on YouTube, inshallah. So that's something you can be rest assured about. So I'm going to give you a chance to ask any questions you may have about anything. If I know the answer, inshallah, I'll do my best to answer it. If I don't, I can try to look it up for you later on.